Keys to Passing NetSuite Financial User Exam Part 4. In the previous session, we have been able to discuss the overview of being a certified financial user in NetSuite, the coverage of the exam and in-depth discussion of topics that includes subsidiaries, classification and chart of accounts, accounts receivable, billing schedules, accounts payable, banking and payment processing and journal entries. In this session, we will continue with the remaining 4 topics to complete our comprehensive review of NetSuite Financial User Exam coverage. 7. Budgeting. In NetSuite, budgets can be created to help plan and track financial performance over a specific period of time. Here are the general steps for creating and reporting on budgets in NetSuite. 1. Create a new budget. Navigate to the Transactions menu, select Financial, and then select Set up budgets. 2. Fill in the necessary information, such as the budget name, start and end date, and the accounts to be included in the budget. Assign budget amounts. In the budget form, you can assign budget amounts to each account included in the budget. You can also specify whether the budget amounts are based on the previous year's actuals, a rolling 12-month average, or a specific forecast. 3. Approve the budget. Once you have assigned the budget amounts, you can save and submit the budget for approval. Depending on your organization's specific procedures, budgets may need to go through an approval workflow before they can be used. 4. Track budget performance. You can track budget performance by comparing the actual results with the budget amounts using financial reports. In the financial reports section, you can select the budget filter to compare actual results to the budget. 5. Update budgets. As the budgeted period goes on, you may need to update the budget based on actual results. This can be done by going back to the budget form and adjusting the budget amounts. 6. Keep in mind that budgeting in NetSuite is a flexible process. You can create different versions of the budget or forecast to reflect different scenarios. You can also use the multi-currency features in case your business operates in multiple currencies. You can upload budgets from an external file in a supported format, like .csv or .xls, instead of creating them manually within the system. 8. Expense allocations. Here are the general steps for setting up and applying allocations in NetSuite. 1. Set up allocation accounts. In the chart of accounts, create the accounts that will be used to track the allocations. These can be income or expense accounts, depending on the nature of the allocation. 2. Create allocation templates. Go to the Allocation Templates page, and create new templates to define how expenses will be allocated among different accounts. Each template will include the source account, destination accounts, and the percentage allocation for each destination account. 3. Apply allocation templates. On the Transactions page, select the appropriate allocation template and apply the allocation to the appropriate transactions by specifying a date range. 4. Review and adjust allocations. Regularly review the allocations to ensure they are accurate. If any errors or discrepancies are found, adjust the allocations accordingly. 5. Generate financial statements. Once the allocations are set up and applied, you can generate financial statements, such as the income statement, that reflect the allocated expenses. Allocation modes. In NetSuite, there are 2 different allocation modes available for allocating expenses: fixed and dynamic. 1. Fixed allocation mode. A fixed allocation mode is a method in which the user assigns specific dollar amounts to each account. Once the user sets up a fixed allocation, NetSuite will always apply the same dollar amount to each account regardless of the amount of expense. 2. Dynamic allocation mode. A dynamic allocation mode, on the other hand, is a method in which the user assigns percentages to each account. NetSuite will then calculate the dollar amount to allocate to each account based on the percentage and the total expense amount. The choice between using fixed or dynamic allocation mode depends on the accounting requirements of your company and the nature of the expenses you are allocating. 9. Financial reports and KPIs. Financial Report Builder Interface. The Financial Report Builder interface in NetSuite is a tool that allows users to create and customize financial reports to meet the specific needs of their business. It provides a flexible and user-friendly interface for creating, formatting, and exporting financial reports in a variety of formats. The following are some of the key elements of the Financial Report Builder interface in NetSuite. Report types. The Financial Report Builder allows users to create a variety of different report types, such as balance sheets, income statements, cash flow statements, and more. Customizable filters. Reports can be customized by applying filters to the data, such as by department, subsidiary, or account type. Customizable columns. Users can choose the columns to include in the report, such as account name, balance, or period-to-date totals. Customizable formats. Reports can be customized to show data in different formats, such as currency, percentage, or number. Date range. Users can specify the date range for the report, as well as the period, such as monthly or quarterly. Comparison. Users can compare reports over time, such as year over year or period over period, in a simple and visual way. Report layouts. Users can create and save custom report layouts, which makes it easy to apply the same formatting and settings to multiple reports. The Financial Report Builder interface in NetSuite provides a lot of flexibility for creating and customizing financial reports, providing the necessary information for a user to make better informed decisions, but also making it important for the user to understand the data and the system so that the reports are accurate and trustworthy. NetSuite transactions impacts to financial reports. NetSuite transactions can have a significant impact on financial reports, as they provide the financial data that is used to generate the reports. The quality and accuracy of the financial data that is entered into NetSuite directly affects the accuracy and reliability of the financial reports. Here are a few examples of how NetSuite transactions can impact financial reports. 1. Income statement. NetSuite transactions that affect the income statement include sales, revenue, and cost of goods sold. If these transactions are entered incorrectly, it can lead to inaccuracies in the income statement and an incorrect picture of the company's financial performance. 2. Balance sheet. NetSuite transactions that affect the balance sheet include accounts payable, accounts receivable, and cash transactions. If these transactions are entered incorrectly, it can lead to inaccuracies in the balance sheet and an incorrect picture of the company's financial position. Cash flow statement. NetSuite transactions that affect the cash flow statement include cash receipts, cash payments, and changes in accounts payable and accounts receivable. If these transactions are entered incorrectly, it can lead to inaccuracies in the cash flow statement and an incorrect picture of the company's cash flow. 1. Allocation. Expense allocations made in NetSuite can have a significant impact on the financial statements. For example, allocating marketing expenses to specific departments can provide insights on the department performance, which is essential in budgeting and cost management. 10. Period and year-end close. Period-end close consideration in NetSuite. At period-end close in NetSuite, several actions are taken to ensure the accuracy and completeness of the financial records. Here are the main actions that happen to the books at period-end close in NetSuite. 1. Locking of transactions. NetSuite's period-end close feature allows you to lock transactions for a period, to prevent any further changes to transactions that have already been recorded. This is to ensure that the financial records are accurate and complete for the period that is being closed. 2. Review and adjustment of transactions. NetSuite allows you to review and adjust transactions that have been recorded in the system, to ensure that they are accurate and complete. This can include correcting errors, making adjustments for accruals, and entering any necessary journal entries. 3. Allocation of expenses. NetSuite's allocation feature allows you to allocate expenses to different departments, subsidiaries, or cost centers, in order to properly reflect the true financial performance of the company. Allocation templates are reviewed and adjusted as necessary to ensure that expenses are being allocated correctly. Reconciliation of balance sheet accounts. NetSuite allows you to reconcile balance sheet accounts, to ensure that the balances match the corresponding general ledger accounts, and the bank and credit card statements. This is an important step in ensuring the accuracy of the financial records. Generating financial reports. NetSuite's Financial Report Builder can be used to generate financial statements, such as the income statement, balance sheet, and cash flow statement, as well as other financial reports as necessary to review the financial performance of the company. Tax liability. Review and verify tax liability in NetSuite, to ensure that all the transactions are correctly recorded and that all the taxes are properly calculated before submitting tax returns. Archiving. Archiving the transactions for the closed period is an important step to keep the system organized, and to have access to previous financial information. Managing multiple subsidiaries and fiscal calendars. When managing multiple subsidiaries and fiscal calendars in NetSuite, there are several key considerations to keep in mind. Subsidiary records. Each subsidiary in NetSuite should have its own subsidiary record, which allows you to track financial information, such as income and expenses, separately for each subsidiary. Fiscal calendars. Each subsidiary can also have its own fiscal calendar, which will allow you to track the financial performance of each subsidiary independently. Consolidated financial statements. NetSuite allows you to generate consolidated financial statements that combine the financial data from multiple subsidiaries into one report. This can be useful to see the overall financial performance of all your subsidiaries in one place. Multi-subsidiary feature. NetSuite has a multi-subsidiary feature that allows you to manage multiple subsidiaries in one account, assign transactions to the appropriate subsidiary and generate financial statements for each subsidiary. Advanced financial reporting. Use advanced financial reporting features in NetSuite such as the Financial Report Builder to generate customized financial reports that reflect the unique fiscal calendars and financial information for each subsidiary. Currency conversion. Keep in mind that NetSuite automatically converts transactions in different currencies to the home currency for reporting and consolidation purposes. Make sure to use accurate exchange rates to avoid errors on the financial statements and consider using a hedging strategy to mitigate the exchange rate risks. Congratulations! You have now completed the keys to passing NetSuite Financial User Exam module. Now let's review the terms and concepts in the next module to further your knowledge. Slay it like a piece of cake.